Welcome everybody to our next webinar, Developing Superb Trading Strategies. My name is Stefan Friedrichowski, as always at that time during that kind of webinar. Today we have the 22nd of December, 11 o'clock, and the year is 2016. That's for the records, and yeah, you see already on my first slide that I announced here already that the next webinar will be next year. It's not that long, but between Christmas and Happy New Year, we will not have a webinar. So the next one will be on the 5th of January 2017 at 11 a.m. As always. So that that you know that already. And but everything will be announced via email as well. And by the way, thanks to ArgusFX, who makes that webinar series possible. Argus is a broker of choice for me as well. And you will see later why I like especially to work together with ArgusFX. Okay, the topics for today are similar as always, but of course I hope some new information for you as well. So I will start with questions and answers from last week, but I have to apologize that there's still one answer ongoing, so the one will know who is still waiting. That needs a little bit thoughts, and I hope that I can do it in the afternoon, and then this question will be answered as well. But there's another one which was much easier to answer, and that is will be done here during the webinar. The one topic for today is once again that we look for spreads, and to look for the spreads in this case at ArgusFX is always extremely important, because spreads are one of the elements which have a huge impact on our trading results. As you know, I always emphasize that whenever you open a trade, you are instantly in the minus, and the simple reason is because of spreads and commissions, if that is the case for that specific broker. So that is quite important to have a look to the spreads, and there have been some changes at ArgusFX, and I will show you the analysis of those changes made. And yeah, the good thing is it's extremely good for us as trader. Then the third topic for today is that I have started two strategies now on the ArgusFX Argonaut platform. That Argonaut platform at ArgusFX is a so-called social trading platform, so it's quite easy to follow those strategies or even others, so not only mine, everybody else can be on the platform, and you can follow other people, or you can be the one who is followed. So that is quite interesting, that somebody follows you. So everything is possible there, and it's easy to use, and you will see it during the webinar. And then last topic is that we go a little bit further with our mean reversion strategy. We have had already some good results on S&P 500, and I go through a number of underlyings today in order to show you the possibilities we have with that kind of strategy of mean reversion. By the way, I have uploaded already the slides from today's webinar, so you can download those slides simply in your GoToMeeting control panel. So then you have all my names, the complicated email address of myself, friedrichowski@argusfx.com, and you have all those links, for example, to the recordings of previous webinars, or whenever you would like to review one of those webinars, no problem. as a YouTube channel, and all the recordings are available there as well. So let me start with a question. By the way, sorry that this question was in German, so now don't worry, I tell you a little bit of what's going around here within that question. But it was quite interesting to get that mail here, and that was related to our S&P 500 mean reversion strategy. And there was one statement, and I like those kind of statements, that maybe the strategy seems to be too good, and that is suspicious. And that's a good remark. And always, if you have good strategies, be careful and look for any mistakes. There might be something wrong. Still, it turned not out that something went wrong with that strategy. But the main question here has been, I use within the Excel sheet an assumption for the spread of the S&P 500 if you trade that underlying at ArgusFX. And the number I used there has been 0.6 for S&P 500. And the question was, hey, that is the minimum spread ArgusFX is offering on the underlying. Is it maybe possible that during the day we would suffer much higher spreads, and that would maybe ruin that kind of strategy? He has done his own calculations, and it turned out that if he increases the spread, for example, to 2.0, then the profitability goes to the south. So, question: do we have really the spread of 0.6 at ArgusFX for S&P 500? And you know that I do always here spread monitoring, and normally I'm more interested in Forex pairs, but because of the question, I looked a little bit more in detail to the S&P 500, and let me share with you the results of S&P 500 spread monitoring at ArgusFX. And what you see here is now a long chart of S&P 500, and formerly you have seen all the other Forex pairs, but now we have on the screen the S&P 500 and how to interpret that kind of picture here. So I use a tool which is called spread monitoring. I think the number is ArgusFX spread monitoring tool, and we get a chart like this here. And originally that chart has single bars for every single M5 candle. So every bar here is one M5 candle, but not the price. It's now the spread, and the bar is created, or is created with a minimum value, and the minimum value, by the way, is exactly 0.6 spread, and there's a maximum value, and this one you can see the number is 0.61 spread. So and the good thing is, whenever we look to the chart here, we never between now the period is already passing 3 days, we have had never a spread number higher than 0.61. So there's an upper limit, and so the spread is always between 0.6 and 0.61. And in average, for example, that is a red line here within all those bars, it's about 0.602. So we are very close to the 0.6, and sometimes we have 0.61, but never more. And that's a very good thing, that we don't have any spikes within our spread curve. And so that means, yeah, we can go for a spread of 0.6 within our calculation. Finally, to be on the safe side, we should increase it to 0.61. Then we are definitely at the maximum we have here at ArgusFX for S&P 500. So it's a quite interesting and quite good to know that we can have indeed those low numbers of spread monitoring. One additional remark here, because to my screen you see that I use servers, so-called VPS, for the purpose of spread monitoring. Those servers I use for our expert advisors as well. And only one small remark here, how to use such a server. You see the CPU utilization here on my screen, and just a recommendation from my end, whenever you use something like that, always minimize those MT4s, because then you can have lower utilization rates of your processor. You see, when we have been on the spread monitoring sheet, then we have the high numbers, and now it's once again a little bit lower. So, but that's only a remark to that kind of topic. Good. Since we talked already about spreads, I continue this a little bit, because during the last couple of weeks and finally over the last weekend, ArgusFX has reduced the spread values of a lot of Forex pairs, and that is quite interesting and quite good for us. As I mentioned already, spreads are, let's call it the zero on a roulette table. If you go to the casino, you know you can never win on the zero, and so it's a little bit statistically you can compare it to that scenario as well. So whenever you open a trade, you are in the minus, and you are in the minus with a spread. And now during the last days and weeks, so standard accounts have been reduced over the last weekend, and a little bit more than a week before, we have reductions in pro accounts as well. And to give you a feeling about those numbers, I built the average about 28 Forex pairs and looked for the spread numbers over a certain period. And those 28 Forex pairs are, let's call it, created by the base currencies, Australian dollar and so on, including New Zealand dollar, which normally is not on my list, but now I put this on my list as well. And the reduction we have now in standard accounts is about 28%, and we have a reduction in pro accounts of even 32%. That you know what is the difference between standard accounts and pro accounts? It's simply that pro accounts have a commission, standard accounts have higher spreads but no commission. And to give you my personal preference, that is definitely pro accounts, because finally it turns out that this in sum is even better. And I not only want to show you those numbers, I would like to show you a little bit more the results here. And that is a picture of standard account and the comparison of before and after spread reduction. And you see those 28 Forex pairs here, and there are a number of pairs with no change, but especially the minor pairs, so pairs with Canadian dollar, New Zealand dollar, there's a huge spread reduction, and in total, well, in average, it's at 28% mentioned on my previous slide. I look for some other numbers as well. They are more statistically driven. That means I use so-called quantiles in order to not only look for the overall average. I look a little bit more to something like a histogram on the spread distribution over the day, and then I use this so-called 95% quantile, and I look then for the average of that 95% quantile and all the maximum values of an M5 candle as well. So that is standard accounts, and I have the same picture here for pro account as well, and you see in total lower numbers than compared to standard accounts. So we, for example, euro, US dollar, we are in average even far below 0.5 bips, which is quite good. And also there we have some reductions in the spreads. And since we have those, I tell you, or I talk about the spread values as well, because as I mentioned earlier, it's extremely important. And by the way, that is the main driver that we decided now to start strategies in real accounts running on that ArgusFX platform. Okay, and what did we start there? That you know a little bit, and how you can use it for your own. There are now two strategies on this ArgusFX Argonaut platform. They all run under the trader, which is called Lambda Strategies. That's a trader name. And we have two strategies started. One in a smaller account, 1,000 euro, that is trading the euro Japanese yen as an open range breakout at a certain time using an EMA for the trend direction. And the other strategy, that is the one we developed during this webinar series, which has been called class trading strategies. And this is here based on M5 candles. And just that you know, there is a YouTube introduction available for that strategy. And you find on my YouTube channel a German and an English version. I think that's now referring to the German one, but anyhow, you will find the English one on the YouTube channel as well. So class trading strategy is a bigger account, and that's a 15K account. I decided to go for those strategies first, one in a small, one in a little bit bigger account, so that everybody may find something for his own. And some key numbers about those strategies. The open range breakout strategy, which only trades euro Japanese yen and nothing else. The risk per trade is 13 euros, and the allowed maximum drawdown within the account is 25%. We don't have any overnight trades within that strategy, and yeah, in average we have one trade per day. Not really always, because from time to time it happens that the range is not broken. I think it was on Tuesday this week, but it's not very often that this will happen. So normally we have one trade per day. And the other account has a risk per trade of 18 euros. The allowed maximum drawdown for that strategy here is 50%. And we have much higher trading activities. So the average number is 22 trades per day even. And that let me show you directly the results here. For example, this class trading strategy is already running since Monday now, and right now we are at a level of in balance. We have earned up to now 10 euros. In equity, it's a little bit more already. That is more than 50 euros. And you see there are a lot of open trades. There are already trades closed. You can realize those in the chart here. And you see always I have this overview here within the chart of all the open trades, or the sum per symbol. And yeah, that's the way, well, that's how it looks like right now. So that is the class trading strategy, that's the one, and the other strategy is the euro Japanese yen breakout strategy, so with a smaller account. And right now, maybe you can see there's a pending order at the moment, and we are close to opening that trade, maybe if it's only a matter of seconds here. You see the breakout scenario. So if now the price would move a little bit higher, then the trade would be opened into the long direction, and you can see already where the stop loss is and where the take profit is within that strategy. So yeah, let's see what happens. The strategy started on Monday, and up to now we have only 2 trades, because on Tuesday there was no trade, so no breakout. And yeah, one trade was in plus, one trade was in minus, more or less same amount. So therefore the actual account is yeah, with €2 in the minus. But this is a kind of strategy. Yeah, well, what can you do? Just that you know how easy it is to follow those strategies. You don't need an expert advisor by your own. You can simply go to the ArgusFX website, and within the ArgusFX website you go to trading and then to Argonaut platform. What you can do already now, just to have a look on those strategies, you simply press the button log into Argonaut, even you have no account. You can come up here. Later, what you need to do is this sign in, but to look to the strategies you can do without signing. And then we have here traders, and in order to find the Lambda strategies, the best is simply to search for those strategies. Lambda strategies is a name. You press the search button, and you can see here already that's prepared for a couple of more strategies. Right now we have those 2 strategies ongoing and running. And for example, if you simply press here such a strategy, then you can see how the equity was in the past. And if it's a little bit longer running, then of course we will have here some overview of monthly return on invest and what kind of symbols are traded. And you see here for that strategy we have a couple of different symbols we trade, yeah, you have all the availability and all the key numbers here for you. And now following is quite easy. The first is what you have to do is you have to open an account at ArgusFX, and then you sign in into the Argonaut platform, and I do it here. And then once again you have to go to the traders and look for the strategies. Let me quickly go through it, because I want that you know how to manage something like following such a strategy. So everything you have to do is you have to press this auto copy button, and now you are asked just one question, and how you want to copy all the trades into your account. And in principle you have 3 choices, but I only would like to recommend 2 of them. One is the so-called equity multiplier, and one is the leader's lot multiplier. Let's start with this one first. What does it mean if we have a leader's lot multiplier of 1? Then it means simply every trade is copied into your account 1-to-1. So if I trade 0.02 lots, then you will have exactly the same lot size for every trade. The other possibility is to have this equity multiplier. Now it depends on the equity of the leader's account compared to your account. Let's assume you have a 30K account and this one is a 15K account. Then it means if you have an equity multiplier of 1, that if in the leader's account there's a trade of 0.01 lot, then this will automatically be in your account a 0.02. And the simple reason is because we have set the equity multiplier to 1, and the mechanism behind or the calculation is always done by comparing your account equity with the leader's account equity, and then you can even change the multiplier, so you can do everything like you want it to be done. And finally, it means that all the trades are copied into your account. Still, you have full access to your account, and nobody else, by the way. The copy functionality is done at ArgusFX directly, and but still you can close trades if you don't like them. So it's absolutely no problem for you to have still access to your personal account. So it's quite cool. You don't need an EA. Your computer has not to be online, and everything is done via this so-called MUM infrastructure behind, and it's really clever functionality. Okay, so that's about those strategies, if you like. And if you have any questions, just send me an email, or if you don't know how to set the parameters, I will help you via email, via Skype, whatever. So we will be in contact about that as well whenever you like. Okay, but now let's go on with our mean reversion strategies. Let me recap a little bit what we have achieved so far on what was the main assumption of those kind of strategies. And in principle, the main assumption is that there is some fair value of an underlying. We don't have directly any definition of that fair value, but it's an assumption. And why not following, in principle, that kind of assumption that there is or there exists a fair value of any underlying. And now, if we would know that fair value, and you know that there are some possibilities how to define a fair value, but now if we have a huge deviation from the actual price compared to that fair value, then the next assumption is that the price will go back to that fair price. So think about something which goes north, and then we have extra move to the north at a certain candle, and then we would call this an excess, for example, and the idea is now, in this case, to open a short trade, because the assumption is price comes back to the fair price. So we would open a short trade, and we would close the trade whenever the trade hits the fair price once again. So that's the scenario and the main assumptions. But now we have to define a fair value. Since I don't have a crystal ball to really tell you or give you the answer to the question, what we can do within the developing of trading strategies, we can simply define something, and let's have a look whether it works or whether it not works. And for example, we can have, or we can define a fair value as being the EMA on a price. So that is something we can do, or we can take an SMA. So whatever we, what indicator we take, in principle, everything is possible. I don't tell you something is better than the other one. I don't know right hand, but we can investigate and see what happens if we follow the main two assumptions in the first paragraph. Another possibility, for example, to have that fair price is that we look for some certain history, let's say the last 100 candles, and we put a so-called regression line into those prices. So it's just a straight line, as being a fitting process of a straight line into the price curve of the last, for example, 100 close prices, and then we simply declare that regression line as being the fair value. It's something similar to the EMA itself, but not exactly, of course. Or another possibility might be that we use values for a price from higher time frames. Just an example. If we want to act on a daily basis, we might look to the weekly prices as being the fair value. So if we have a close value on Friday for the ongoing week, then we take that price as being the fair value for the next week. That's just another possibility. Or you might have heard about so-called pivot points. Pivot points are a simple calculation on a candle based, and there's always a formula to get those pivot numbers. Also, that might be a possibility to define a fair value. So it's up to us to use any of those definitions, and it's up to us then to investigate whether we have a good strategy, yes or no. Still, we have the common rule. Whenever we have an overacting and an excess, then we assume that that excess will be corrected. So we open a trade into the opposite direction of this overacting. What have we achieved already? We have achieved, and you see already some numbers, and I will go through that list in the following. We started with the S&P 500. And I now use only one single number in order to characterize the performance of the strategy. And that one number, which is called in, let's call it my language, just opti, is a number which has 3 inputs. And the first of 2 inputs are quite easy to define. And the first input is the profit per day. That is the number we can calculate from our equity, historical equity line, and that is the profit per day. That number should be high in order to have a good strategy. The next number is that we have the maximum drawdown within the historical consideration of our equity. So the drawdown is even important as the profit per day, but in the other direction, meaning the maximum drawdown should be small. So we have 2 numbers. One should be small, the maximum drawdown, and the other number should be high, that is the profit per day. So the best is we simply divide those 2 numbers, and then we have a single number. And since I do it in the way maximum drawdown divided by profit per day, this opti number is the better, the smaller. There's still one additional number in my consideration, and that is the linearity of the equity curve. The linearity is something I simply like, and I call a strategy the better, the more linear the equity curve is. And therefore, I use the mathematical definition of the so-called R square, and that is just another number. This number is between 0 and 1, and I divide by that number as well. So finally, I have one single number in order to describe the performance of a strategy. And you see, S&P 500 has been the first one. Let's have quickly a look to that right now here. S&P 500 mean reversion, and by the way, we can still check what happens with this so-called opti. That is the number, the 713. What happens if we change the spread to the worst case scenario of 0.61? and you might remember it was 713, and now it's 717. So there's no huge impact of that other spread value. So still we have a very good equity line. It's quite straight. So this straight means this R square is a number close to 1, and I calculate that opti value here. So that was the first test of S&P 500. But I have done a little bit more. The next thing I tried was to use the same strategy for DAX values, so another index. And if I refer my values, or if I call them DAX Yahoo, then that means it's the so-called Xetra DAX, so the one which starts at 9 and ends at 5:30 in the afternoon. So that is the numbers you can download at Yahoo, and in order to have that still here in the title of my file name, I use the name DAX Yahoo. And once again, doesn't look that bad. Okay, there's a period of a couple of years here where no trades are entered. Okay, you might think that's not that good, but have in mind that my final goal here is not a single strategy. Finally, I want to combine those results, and I would want to combine a couple of strategies or sub-strategies into one account. For example, trading S&P 500 plus trading DAX, and so on and so forth. So still, the good thing is here, DAX works as well. And next I tried was going from the DAX values to the FDAX values. What is the difference? Now we have values for the period 8 o'clock in the morning and 10 o'clock until 10 o'clock in the evening. And so the period or the definition of one D1 candle is a bit different. And you see, okay, that strategy does not work that well with that underlying, but still I have not put that much effort in optimizing those values. Still this is on my to-do list. But you see, what does it mean to have an opti number of a little bit more than 2,000? Even visually, you can see an equity line, which is not that good, but it's even, or it's better to have a mathematical definition that makes it easier and not just look to equity lines. So that was FDAX. Still, it's good to see that it in principle works, even if it works not the same good as for the other underlyings. Next example, and I go first back to my slides here, that you see the number, because what I tried next was Brent. So I went to the Brent prices. We have had already a strategy on the pair trading, Brent versus WTI, and you see already, looking now to those numbers for the opti value, the Brent strategy is the one with the best values, only an opti of 400, and to have a look to that visually, then now the equity line looks like this here. It's quite cool. It's nearly a straight line, not that big drawdown, huge slope, so everything is looking very good. And you, even not putting all those strategies, let's say, together in one Excel sheet, in one equity line summed up over the sub-strategies, you can imagine that this portfolio would have quite brilliant equity finally. Then Next thing I tried has been a Forex pair. And the Forex pair I used first here was US dollar Japanese yen, just in order to have a look, hey, does it work for Forex as well? And result, you see already the number is not that good, but even in principle, it works as well. We have not that slope and it's not that straight, the equity line, which is characterized, by the way, once again, via this R square value. But in principle, it worked. So that's good. Good results, and I think I can even go further and I can have a look to other underlyings as well. But to make a long story short, I next went to Euro US dollar, and I realized, let's call it problems. What does it mean? I only, up to now, I only try a couple of minutes in the parameter space, or the degrees of freedom we have. And the degrees of freedom we have is the EMA period, the stop loss value, and the multiplier for the deviation threshold to enter trades. And in principle, we have to take profit if we want, but in most cases, we can work without a take profit because a trade is closed due to the other reason. The other reason is that the price goes back to the fair value. But I entered into problems with Euro US dollar. And this was then, as in most cases, the principal idea, hey, can I do something with my problems? And maybe I can create a new strategy. And what I have done here is something I would normally not do. And we talked about that already in a previous webinar. The idea has been, can I reverse my strategy? So can I reverse the mean reversion? Sounds crazy, I know. So in principle, I know for sure that if you have a bad equity, then just mirror the trades. So whenever there has been a long trade, open a short trade, and vice versa, does not help in principle, because that is mathematically the expected behavior, because trading is not symmetrical. At least you might remember my statement, it's not symmetric because of spread, which is not zero, and because of stop loss and take profit, which are normally not one-to-one. Only trading would be symmetric if spread is zero and you have a risk-reward ratio of 1. So, but anyhow, in principle, it's not the way. So in principle, it's not a good idea to just reverse whatever strategy you have. But I tried, and you will see it doesn't look bad. But let's try to convert this idea, to translate it into a wording. And then you will immediately realize that to reverse the mean reversion strategy means it's more like the power candle strategy. You might remember power candle strategy has been, hey, we have a huge candle into one direction, and then we realized it might be a good idea to open a trade into that direction of the power candle. Okay, that is just the opposite of the mean reversion. Still, I know power candle and our deviation from the mean is by far not the same, but the characteristic or the wording in describing that kind of strategy is similar. And you will see now it worked much better for Euro US dollar, and finally I tried the same idea for the gold price as well. So, but let's have a view on how that works. Now here on my screen we have the Excel sheet for the mean reversion strategy of Euro US dollar. So it's in principle, I can now change parameters. I can go for other EMA values, and you see, okay, maybe not. It's a little bit better, but even that is once again worse. And going for other parameters here might increase, but in this case, still it doesn't work that good. And since I have had always equity lines which go to the south here, therefore I simply tried to reverse that strategy. And to do that reverse is extremely easy within this Excel sheet, because all I have to do is we have a column here, the column O, and there we decide what trade direction we would open a trade. It's called the long-short column. And all I have to do here within the Excel sheet is I have to take out this minus, which means now the trades are opened into the opposite direction. And then copy it down. And you see already what happened here. At least the equity line is not that good, but at least the equity is positive. Once again, I will repeat myself. In general, it's not typical that reversing a non-performing strategy would create a performing strategy. But at least here it worked already on the first try. Now I put here a remark in that I use the reverse here. Don't forget that I have done this here, therefore mentioning reverse. And now I can once again try to have other EMA values. And what I realized now, and therefore it's good to change numbers here. Okay, I tried different numbers for EMA, and let's say always I have positive results, which is much more promising than in the original kind of strategy. And let's try some other numbers. Okay, doesn't work that bad. And even maybe we can go for lower values of the multiplier, and maybe we can create even better strategies here. Finally, it does not look that good, I agree, but in principle it looks better than the original strategy because within our parameter space we have much more values, so much more volume within that parameter space for positive results than negative results. So therefore, in principle, it's a good idea to have both kind of possibilities, the mean reversion strategy in the original one and the reversed one, and always look which one acts better. And for Euro, US dollar, for whatever reason, it looked better to go for the reverse one. I have tried another underlying here, and that was the gold price on a daily base, and same happens here. And I have to go for the reverse kind of strategy in order to have good results. And that is, by the way, not that bad. The opti value here is now 1,000, around 1,000, which is always a good number for any kind of strategy. So when I can change once again here EMA values, take profit values and multipliers, and it does not hurt really the strategy. So let me describe a little bit more. If you want to try something, and you know that you can have all those Excel sheets if you want, how to do it. And you have seen already one manipulation, let's call it that way, that was here within that column, that you might reverse it or do not reverse it. That is simply done here by entering one additional minus or plus value, because the original value is a minus value, and now the reversed one is a plus value. Then we have those degrees of freedom like the EMA. We have the multiplier for the threshold, and for sure it's a good idea to manipulate the stop loss value for those trades. There's still one thing you can do, and you can try whenever you have, or if you want to analyze a new underlying. That is a question: do we measure the distance between actual price and EMA? Do we measure that, let's call it the distance? Do we measure it in real numbers, so just the difference, or do we measure it on a percentage base? So that is something which is especially important, for example, like here for gold. You see the prices of gold started at 2000 with the numbers in the order of 200. In between, the price has been, I think, at 2000. That was about the maximum of gold. Right now, we are at a level of 1100. So there's a huge amount of different kind of numbers. So the overall range is quite big. And in this case, it's always better to measure that distance for the question, do we have an overacting, yes or no, to measure that distance on a percentage base. That means I take the difference between the actual price and the EMA on that price, and I divided that difference by the EMA value once again. Let me change it here in this case. So let me change it back to just going for the difference. And then you will immediately see what happens. And now everything, there's still a percentage, percent sign here, but you know, I take simply the difference here. And you see that especially at the beginning of the equity, we don't have good values. And now, having in mind that at that level we have low absolute values of the gold price, it doesn't wonder me, because in this case, going for anything on a percentage base is the right way to do it, and not in absolute numbers. For Forex, in most cases, there's not such a huge difference between the absolute number and the real difference, or the difference on a percentage base, because we don't have that huge deviations between the overall low and the overall high. But for gold, DAX values, for example, it's in most cases better to go for this percentage consideration. So let me go back here to that kind. So always divide the difference by the EMA value, and then we are done. So in summary, it looks quite interesting, because now what we have is, and I can now go on with that list, we have already 3 values or 3 underlyings with an opti much lower than 1000. That is a typical threshold I use for strategies. Whenever that number is smaller than 1000, I call the strategy good. But even in the portfolio, I can have higher sub-strategy values as well. That does not hurt really the overall performance of that portfolio. Still, we have, due to that diversification, a good overall effect. So we can add up here the Euro-US dollar strategy as well as the gold strategy. And now finally the task is go a little bit further, investigate some more underlyings, do it systematically in a more objective way. That means not only turning around the numbers in Excel. You can do that, and I like if you do it, because you make some additional observations I may not find out. And so I will do the job now via C programming and optimization in a common way, or in a universal way of consideration. And then I can come up with the portfolio of the mean reversion strategy, and maybe I put it additionally on top or as a separate strategy, the reverse of the mean reversion strategy. So let's look what finally comes out and what will be the best for the next portfolio. Okay, so it's quite interesting to see that we can change from something which does not work, and that was an observation. It did not work on Euro-US dollar to come up with, let's say, the idea for a new strategy. So that is quite interesting. But yeah, now we have a new one, and we can set up a new principle for a strategy as well. So very good to have that. And now for me, time is already over, nearly 1 hour gone. It's time to say Merry Christmas for you, and have a Happy New Year. And hopefully see you again on the 5th of January 2017, fresh with new ideas for the next year. And let's see what comes out. Okay, thank you very much, and have a good time. Bye-bye.